Now, the pound is on the way down in today's session after data showed that the UK economy unexpectedly shrank on the month-on-month data in October. Let's take a look at the figures. Gross domestic product falling 0.3% in the month of October. We had been looking for a flat number. GDP, three-month average, flat. The consensus had been for an expansion of 0.1%. Now, the British economy unexpectedly shrank. We've been looking at a flat number. Comes as households and businesses come under growing pressure amid the cost of living crisis. And it comes after growth of 0.2% in September. Now, today in these numbers, there's been contractions across pretty much every single sector of the economy. In fact, all. The UK's dominant service sector was the biggest driver of the drop in output, with declines in IT, legal firms and film production, according to the data. These are compounded by widespread falls in manufacturing and construction after poor weather led to a drop in activity. You can see also here industrial production rising 0.4%. We've been looking, though, for a consensus of a rise of 1.1%. And this latest data could well strengthen the case of the Bank of England to signal that it's meeting tomorrow that it may cut interest rates sooner than many currently believe. Let's take a look at this chart here. We are currently 40 minutes after the release of the data. These are 5-minute candles indicating that we've got this big decline, relatively speaking, in the price of sterling against the US dollar. This was the candle that represented that drop as a result of the concerns about the contraction in the British economy. Interest rates are high. That's the problem. That's the message. The Bank of England know what's happening. They know that consumers are under pressure. They know that people haven't got the money to spend on discretionary items. They know the winter's coming, and they know that more pressure is going to be brought to bear on personal household budgets because of the price rises that we're seeing again coming through in the fuel costs. And of course, food as well, high as well. Inflation certainly not beaten here in the UK. But nonetheless, expectations potentially now could well be to see whether or not the Bank of England has any appetite for cutting interest rates from the recent move that we've got. Just to quickly go back into the daily chart, just to remind ourselves as to where sterling is trading. We've got mindful of the fact that later on today, we've got that US dollar side of the story with the release of the Fed interest rate decision at 7 o'clock this evening. UK time, no move there expected. All this coming ahead of the Bank of England at midday on Thursday.